accounting ratios. This is the tool for corporate or business health analysis. ये health क्या है, business health क्या है, what is business health? If we compare with a human being, suppose करो कि कोई ह्यूमन अगर डॉक्टर का पास जाता है तो डॉक्टर क्या करते हैं, तो फास्ट उसका टेम्परेचर, बॉडी टेम्परेचर देखते हैं, उसका पल्स देखते हैं, पल्स रेटिंग, ब्लड प्रेशर देखते हैं। ये सब देख के एक कंक्लूजन पर आता है कि और टेस्ट का कोई ज़रूरत है कि नहीं, एंड अल्टीमेटली फाइनली वो डायग्नोसिस करते हैं तो कोई बीमार है कि नहीं, एंड देन हाउ टू सॉल्व इट। एग्जैक्टली बिजनेस का केस में अकाउंटिंग रेशियोज का पर्पस वही है। दीज आर द टूल्स टू डिटरमाइन डिफरेंट पैरामीटर्स, और उससे पता चल जाता है बिजनेस का हाल कैसा है, अच्छे से चल रहा है कि बुरा चल रहा है, व्हाट आर द स्ट्रेंथ्स एंड वीकनेस ऑफ द बिजनेस, उसका इमीडिएट पेइंग कैपेसिटी कैसा है, दैट मीन्स लिक्विडिटी पोजीशन कैसा है बिजनेस का। अगर किसी से उधार लेता है तो इट इज पॉसिबल टू रिपे इमीडिएटली और नॉट, ये कोई प्रॉब्लम होगा। तो बिजनेस में भी वैसे ही हम लोग एनालिसिस कर सकते हैं हेल्थ का। तो सारा प्रॉब्लम्स को बिजनेस का हम लोग 4 ग्रुप में बांटे हैं। 4 टाइप्स ऑफ इंफॉर्मेशन विच आर वेरी रेलिवेंट टू डिटरमिन द स्टेटस ऑफ द बिजनेस और हेल्थ ऑफ द बिजनेस। वो क्या क्या है? लिक्विडिटी, लिक्विड रेशियोज। लिक्विड रेशियोज मीन्स इमीडिएट पेइंग कैपेसिटी, शॉर्ट टर्म फाइनेंशियल पोजीशन। अगर किसी ने किसी को शॉर्ट टर्म उधार दे रहा है, देन ही विल चेक वेदर इट इज एडिक्वेट और नॉट। अगर ये ठीक नहीं है देन उधार नहीं देंगे। कोई रॉ मटेरियल्स खरीद रहे हैं शॉर्ट टर्म पीरियड का लिए, ही विल असेस दिस ग्रुप ऑफ रेशियोज। क्या चेक करेंगे कि उसका इमीडिएट पेइंग कैपेसिटी कैसा है। हाउ विल डिटरमिन दैट आई विल डिस्कस लेटर। नेक्स्ट, कैपिटल स्ट्रक्चर और लीवरेज रेशियोज। ये क्या है? दिस ग्रुप ऑफ रेशियोज विल इंडिकेट द सॉल्वेंसी ऑफ द बिजनेस और लॉन्ग टर्म फाइनेंशियल पोजीशन ऑफ द बिजनेस। बिजनेस का लॉन्ग टर्म फाइनेंशियल पोजीशन कैसा रहेगा, दैट विल बी डिटरमाइंड बाय ऑल दिस रेशियोज। नेक्स्ट ग्रुप क्या है? प्रॉफिटेबिलिटी रेशियोज, मीन्स प्रॉफिट अर्निंग कैपेसिटी ऑफ द बिजनेस। वो कैसे निकलेगा प्रॉफिट अर्निंग कैपेसिटी? सपोज इन फ्रंट ऑफ यू देयर आर 3-4 businesses. You are interested to invest your money to that businesses or any business of you have to check किसका प्रॉफिट अर्निंग कैपेसिटी अच्छा है, किसका बुरा है, किस तरह से है। तो यू हैव टू कंपेयर फॉर ऑल द बिजनेसेस with these ratios. This group is the profitability ratios. This group, another group, this is activity ratios. Activity means operational efficiency of the business. How the operations are going on. How the assets are being utilized. Operational efficiency will be reflected by the analysis of this group of ratios. तो रेशियो व्हाट इज रेशियो? इसका जरूरत क्या है? रेशियो का जरूरत इसलिए, रेशियो कुछ नहीं है, द रेशियो ऑफ 2 रिलेटेड वेरिएबल्स और टर्म्स। दिस इज ऑल्सो रेशियो, नेट प्रॉफिट रेशियो। नेट प्रॉफिट, वी नो व्हाट इज नेट प्रॉफिट एंड सेल्स। इफ वी मेंशन ओनली नेट प्रॉफिट, सपोज करो कि बिजनेस ए एंड बिजनेस बी, इसका सेल्स फिगर से 10 lakhs, सॉरी इसका नेट प्रॉफिट से 10 lakhs और इसका 20 lakhs। तो व्हिच बिजनेस इज गुड? इसका अर्निंग कैपेसिटी अच्छा। इट इज नॉट पॉसिबल टू डिटरमाइन बाय सेइंग ओनली द नेट प्रॉफिट। लेकिन नेट प्रॉफिट को अगर हम सेल से देखते हैं, बिकॉज नेट प्रॉफिट सेल से रिलेटेड है, तो देखो हाउ विल गेट द इंफॉर्मेशन। Suppose the sales of this firm is 20 lakhs and for this firm is 20 lakhs. Then whose profitability is good? Whose profit earning capacity is more? For this case, the earning is 50%. And how you have estimated it? Net profit divided by sales into 100. Sometimes you will see only the ratio 2:1, 3:1 like that, or sometimes you will see in percentage form. Which are the related terms for the ratio? Net profit and sales. And what is the net profit ratio for this firm? That is 33.33%. Now tell me, which firm's earning capacity is more? Net profit था 10 लाख कम, इसका ज्यादा. But when you have estimated the net profit ratio, तब देखते हैं कि इसका 50% and इसका 33%, 33.33%. That means the earning capacity of this firm is more. That's why only magnitude or one figure is not enough to get the total information. We use the ratio. Only then you will get the full information. In my previous video, I have discussed the vertical format of profit and loss account and balance sheet. Actually, ये सारे information जो यहाँ पर दिखाई पड़ रहा है, inventory or stock, debtors, dividend, turnover, everything will be available in that format. I have discussed in my previous video, that from horizontal format, first you transfer the information to the vertical format and then use accounting ratios. Now I am going to discuss one by one group. What are the ratios and what information comes out? Again I am repeating. तो हमने क्या बोला? Actually accounting ratios से हम लोग बिजनेस का हेल्थ एनालिसिस करते हैं, उसका स्ट्रेंथ एंड वीकनेस देखते हैं एंड उसका प्रॉब्लम फाइंड आउट करते हैं एंड अकॉर्डिंगली यू कैन सजेस्ट द सॉल्यूशन आल्सो. दिस इज द पर्पस एंड ब्रॉडली वी क्लासिफाइड द रेशियोज इन 4 ग्रुप्स. 4 कैटेगरी में हम लोग सारा रेशियोज को रखते हैं, सो दैट कि 4 टाइप ऑफ इंफॉर्मेशंस आर वेरी इंपॉर्टेंट टू नो फॉर द एनालिस्ट, for the user of balance sheet and profit and loss account. Simple balance sheet से कोई काम नहीं हुआ ना. You have to find out the information and accordingly you will have to take the action. ये 4 groups क्या है? I've already discussed. Liquid ratios, capital structure, leverage ratios, profitability and activity. Liquid ratios means this group of ratios will indicate immediate paying capacity of the business or firm or corporate, whatever we like to mention. And this group क्या देखते हैं? क्या information, which information will come out from these ratios? These ratios leads to identify, to know the solvency of the business, means long-term financial condition of the business. कौन यूज करते हैं इसको? फाइनेंसर जो लोन देंगे, लॉन्ग टर्म लोन देंगे. They will check the ratios and take decision क्या और लोन दिया जा सकता है कि नहीं, इसका फ्यूचर फाइनेंशियल पोजीशन ठीक रहेगा कि नहीं, ऑल दिस थिंग. एंड दिस इज द प्रॉफिट अर्निंग कैपेसिटी, दिस ग्रुप्स व्हिच आर द रेशियोज दैट आर डिस्कस. एंड दिस इज द ऑपरेशनल एफिशिएंसी ऑफ द बिजनेस. इसका मैनेजमेंट कैसा है, स्ट्रॉन्ग है कि नहीं, सारा एसेट्स प्रॉपर्ली यूटिलाइज हो रहा है कि नहीं, डेटर्स को तो कलेक्ट करते हैं, एफिशिएंटली कलेक्शन हो रहा है कि नहीं, इन्वेंट्री और स्टॉक्स उसका यूटिलाइजेशन सही हो रहा है कि नहीं. ऑल दिस कंट्रीज ऑपरेशनल एस्पेक्ट will be identified with these ratios. तो first liquid ratios. कौन कौन ratios इसमें आते हैं? सबसे important and popular is the current ratio. हम एक का एक one by one formula discuss करते हैं. And after this एक numerical example लेंगे, उसका you have to solve it and you have to interpret it. Current ratio कैसे निकलेगा? Current assets divided by current liabilities. करंट एसेट्स में क्या क्या चीज रहते हैं, दैट आई ऑलरेडी मेंशन इन माय प्रीवियस वीडियो. cash balance, bank balance, sandy debtors, inventory, that means raw materials, work in progress, finished goods, debtors, bills, receivables, all these items. Current liabilities means that I have already mentioned in my previous video. That is short-term liabilities. You have to pay within very short span of time, maximum 1 year. Bills payable, outstanding, short-term outstandings, and sandy creditors, all these things I've already discussed. So from that format, you will take the values and total it. And the standard value of current ratio is 2:1. मैं किसी का पास अगर 2 रुपया है and 1 रुपया is the obligation, then it is good. This is standard. So this is current ratio. Next, quick or acid test ratio. Quick ratio, same thing, or acid test ratio. This is quick assets divided by quick liabilities. ये quick and current में difference क्या है? Quick means immediate paying capacity. इसमें थोड़ी देर लगता है. तो इससे करंट असेट्स से अगर इन्वेंट्री और प्रीपेड एक्सपेंसेस दोनों को निकाल लेते हैं, देन यू विल गेट क्विक एसेट्स. क्योंकि टू गेट और कन्वर्ट द इन्वेंट्री टू कैश तो थोड़ी देर टाइम लगता है. इन्वेंट्री को अगर कैश में कन्वर्ट करना है टू पे, तो इट विल टेक टाइम. दैट्स व्हाई इट इज सब्ट्रैक्टेड. प्रीपेड एक्सपेंसेस मीन्स एडवांस पेमेंट, पहले से दे रखा है, ये पैसा तो तुम्हारे पास है ही नहीं, तुम लोगों के पास है नहीं, तो इसको भी इसलिए निकाल दिया जाता है. तो उसके बाद जो भी एसेट्स है दैट इज लिक्विड एसेट्स, क्विक एसेट्स. इट कैन बी यूज्ड फॉर पेमेंट इमीडिएटली. करंट लायबिलिटीज से अगर बैंक ओवरड्राफ्ट, जनरली ये थोड़ी दिन टाइम मिल जाता है टू पे, दैट्स व्हाई इट इज एक्सक्लूडेड. एंड आफ्टर सब्ट्रैक्टिंग वी गेट द क्विक लायबिलिटीज. एंड व्हाट इज द स्टैंडर्ड वैल्यू? स्टैंडर्ड वैल्यू इज 1:1. दैट मीन्स अगर क्विक एसेट्स अगर रुपया 1 है तो 1 रुपया तक क्विक लायबिलिटीज इज एक्सेप्टेबल. अगर ये अगर 0.5:1 हो जाता है दैट मीन इट इज वेरी बैड. दैट मीन तुम्हारे पास पैसा है ओनली 50 पैसा और 1 रुपया का ऑब्लिगेशन है, यू विल बी इन ट्रबल. नेक्स्ट, टर्नओवर रेशियोज. वी विल डिस्कस टर्नओवर रेशियोज in this area also. That's why I'm not discussing here. Turnover means how speedily the assets are rotating. जितना टर्नओवर ज़्यादा होगा that means liquidity is more. अगर assets बहुत जल्दी उसका यूटिलाइजेशन हो रहा है that means your liquidity position will be improved. This is turnover ratio that will be discussed separately in this case. Now coming to capital structure and leverage ratios. Just I have mentioned here the formulas and we'll use that formula for solving a problem later. First, debt equity ratio. Debt equity ratio means the numerator part, long-term debt. All long-term debt will come, long-term loans from banks, debentures, or any deposit taken for long-term period. All long-term debt will be here, and this is shareholders' equity. How the shareholders' equity will be calculated? That I have shown. Shareholders' equity will get directly from the balance sheet. So this is the formula for debt equity ratio. And next, proprietary ratio. How it is calculated? Shareholder equity or proprietor's equity divided by total assets. This is the formula. Proprietor's equity means proprietor's equity, shareholder's equity, proprietor's equity, equity share capital, preference share capital plus reserve and surplus. All these are the part of proprietor. That's why it is proprietor's equity. Higher the ratio, the stronger the long-term financial position, vice versa. Now capital gearing ratio. The formula is this: preference share capital divided by equity share capital. Gearing ratio, preference share capital plus debenture plus long-term debt divided by equity share capital plus reserve and surplus. In this way, we will also discuss the other formulas also. After knowing the formula, you have to apply to the actual problems for finding out the strengths and weakness or health of the business, or you can say the liquidity position of the business, long-term solvency, profitability, and operational efficiency. Formula to compute few more ratios. First, interest coverage ratio. How it is computed? The formula is EBIT, means earning before interest and tax, divided by interest. Actually, interest will be paid from this fund, earning before interest and tax. I have already shown in my previous video in the vertical format how EBIT is calculated. Higher the ratio is safe for the creditors. Suppose the ratio is 10 is to 1. Suppose the ratio is 10 is to 1. That means the interest obligation payment coverage is 10 times. Even the EBIT falls or decreased to 1/10 of the current situation, still the company will be in a position to pay the interest. That's why higher the ratio is safer for the creditors, those who extended fund against which the interest are being paid. This is the purpose. Coverage ratio, interest coverage ratio. How many times the interest payment obligation is covered. Similarly, dividend coverage ratio. Dividend obligation to preference shareholders. That's why the ratio is computed with this formula. Earning after tax divided by preference dividend. Next, earning per share. The formula is net profit available to equity holders. Net profit available to equity shareholders divided by number of ordinary shares. Okay. Dividend per share. Dividend is paid from this fund. That means net profit after tax minus preference dividend. The remaining fund will be used to pay dividend to equity shareholders. That's why the numerator part is net profit after tax minus preference dividend divided by number of ordinary shares. Price earning ratio. This is also very popular ratio. Market price of a share divided by earning per share. Return on assets. All these are the formulas just I am discussing now. I have shown here. In my next video, I will show you one numerical examples how to calculate the ratios and will interpret the results to find out the problems also and how to solve it. Everything will be shown through numericals. This is the formula only. Just I am discussing how to compute the required formulas. Return on capital employed. Return means net profit after taxes plus interest. This is the total return divided by total capital employed. How total capital employed is to be computed? It is also shown in the previous video. Vertical format of balance sheet. Gross profit ratio, gross profit divided by sales into 100. Net profit ratio, net profit divided by sales into 100. This is the ratio which is indicated by percentage, 20%, 25%, like that. Now, activity ratios. I have already discussed one group to determine the operational efficiency of the business or firm, that indicates by activity ratios. Here I have shown few formulas for that purpose. First, inventory turnover ratio, the rotational speed of inventory. How you calculate it? Cost of goods sold divided by average inventory. Cost of goods sold, I think you know how it is to be computed. It is also shown in the vertical format of profit and loss account. Average inventory means the average of initial inventory plus final or closing inventory divided by 2, average inventory. If cost of goods sold figure is not available, sales figure is available, then sales figure can be used also. Higher the ratio means indicates the inventory are being utilized efficiently. If it is very low, that means it may be due to bad buying, bad quality of finished product, inventory is piling. It's a wrong signal. That I will discuss how we interpret the results. So in my next video, my purpose is to compute the ratios, related ratios, and what informations are coming out to interpret the results, and also rectification of the problem. How I will deal the problem. That is the next part, which will be shown in my next video. The application of the ratios. Now, debtors turnover ratio. How speedily the debtors are being collected. Because that means recovery efficiency, debtors collection efficiency. Net credit sales divided by average debtors. If the ratio is high, that means the debtors are being collected efficiently. Suppose the ratio is 10:1. Then what is the interval for collection of debtors? If 365 is the days, considered days in a year, then 365 divided by 10, that is 36.5 days. Approximately 37 days required to collect the debtors on an average. In this way, you can calculate and interpret. And also you can compare with other organization. What is their debtors extension period or debtors period. By comparing, you can come to the conclusion what is your position. Your collection efficiency is good or bad, or what actions to be taken. Next, creditors turnover ratio. How it is to be calculated? Net credit purchases divided by average creditors. Total asset turnover ratio. Cost of sales divided by net total assets. With this ratio, you can get the information of asset utilization efficiency. If the ratio is very low, that means the assets are not properly utilized. Utilization is below the standard. All these are the activities. There are so many other ratios also, but I have mentioned here only few ratios. Next, earning power or return on investment. It is very important ratio. By this, you can guess what is the earning from this business. As a layman, what is the ROI? You are interested to know. That is return on investment. How it is to be computed? Net profit margin into total assets. Net profit margin, that means ROI depends on these two factors. Profit margin multiplied by total asset turnover. You can check also. ROI is this net income divided by total assets. This is the return on investment. Margin, net profit margin means net income divided by sales. This is the net profit margin, and total asset turnover, sales is turnover divided by total assets. Sales will strike out net income divided by total assets. That means ROI has this relationship. ROI is dependent on these two factors. With the help of this, you can adjust your policy, how much margin you will fix for your product. How? Suppose you have decided that you need 30% ROI. Suppose you have decided on the basis of all opportunities 30% ROI is required if you invest your fund to this business. Now, if the nature of the business is like that, the asset turnover ratio is very high. Generally, for perishable goods, fast foods, the asset turnover ratio is very high. Say, the asset turnover is 10 times. The asset turnover ratio is 10:1, 10. In that case, if you keep the margin 3% only, then you will achieve the ROI 30%, because 3 into 10 is 30. If your asset turnover ratio is 8, say 6, your asset turnover ratio is 6, then 5% margin is enough to get 30%. But if your industry or business is such that whose asset turnover ratio is very low, say machine manufacturer, lathe machine manufacturer. Lathe machine is generally manufactured, say, at Batala in Punjab. And the sale of machines is not so high as fast food. Say for machine manufacturing units, those who manufacture large machines and sell in the market, the asset turnover ratio is, say, 2:1 only. But you need 30% ROI. Then definitely you have to increase your margin to cover ROI. In that case, you have to fix the margin 15%. That means those industry or business where turnover ratio, asset turnover ratio is very low, you have to keep the margin high, and vice versa. This is the concept. Now I am coming to the last one very important ratio, DSCR. What is the full form of it? DSCR, debt service coverage ratio. Debt service coverage ratio. This is very important ratio for the financer, those who extend long-term loan. SSI units, medium sector units, large units, suppose you are going for long-term loan for 8 years, 10 years, 15 years. The financer will check at the time of project appraisal or preparation of project report whether the DSCR is adequate or not. Debt service coverage ratio is adequate or not. This indicates the paying capacity of the business. How it will be computed? The ratio is computed profit after tax plus depreciation plus interest and term loan. If the life of the project is 10 years, then for the 10 years, total profit after tax, total depreciation, total interest and term loan. This is the total fund available from which you have to pay this. This is the obligation part. Repayment of term loan for that 10 years, total the life of the project plus interest payable on term loan. If you compute this ratio, then it is called debt service coverage ratio. What is the standard of it? The standard is 2:1. That means if the surplus or the fund available from where you have to repay the term loan and interest is twice than the obligation, then it is good. Financiers generally stick to this ratio. If the ratio falls or decreases from this, say 1:1, they will not agree to finance. 1.5:1, still it is not so good or acceptable. Sometimes the DSCR may be decreased slightly, basically for hotel business, nursing home, where maximum investment is on fixed assets which is attached with the ground, land and building for hotel business, for nursing home. Like in that case, you can decrease the DSCR from 2:1 to 1.75:1, even 1.6:1. It will depend on the financer. If it is more, then it is more good. But maximum or higher than 2:1 will indicate unutilization of loan availing capacity. That's why it is better to maintain within this. So this is the ratio which is very important from the long-term financer for any project. When you will go for taking long-term loan, bank, financial institutions, State Financial Corporation, Industrial Development Bank of India, IFCI, Industrial Financial Corporation of India, those who generally extend the long-term loan, they will definitely check this ratio. That's why you always aware of this ratio. And in my one separate video, I will show you how to prepare a project report for getting term loan. And in that video, I will definitely explain in detail how it is to be calculated and how it is to be maintained, everything. Thank you.